Welcome back. Let's talk to the management of TCI, Transport Corporation of India. The company reported the Q4 numbers. Now, in Q4, the company's managed to report a double-digit revenue growth, but Q4 is typically the strongest quarter. For the full year, though, the top-line growth is limited to 6.5%. To talk about the way forward, the margin outlook, we have Vineet Agarwal, MD of the company, to take a few questions. Vineet, morning. Thank you for joining in. This is Rima here. First, if you could guide for FY25. FY24 was a 6.5% top-line growth kind of a year. What should we expect in FY25 on revenues, margins, and what would be the key drivers?
Hi, Rima. Good to be back. FY25 looks a lot more exciting than FY24. I think at the start of FY24, we felt that things were slowing down a bit. And we did maintain a aggressive 10% top-line growth, but that didn't happen. We did correct in the middle as well. FY25 looks exciting because I think with whenever the new government comes in place, we'll definitely see a lot of activity there. Certainly a lot of spend on infrastructure that is going to keep increasing, which has a direct impact on logistics as well. And we are guiding for about 10 to 15% again on the top line and the similar on the bottom line. It is, and a lot of other sectors will also start playing up with, the manufacturing PLI schemes that is going on. We are seeing good traction from there. A lot of companies now starting production as well. Automotive sector continues to do well. Might be a bit of a slowdown, but there are lots of other areas in the automotive space that seems very, very attractive.
You're saying, if I could get that again, about 10 to 15% growth at the top line and at the PAT level, Vineet, if I caught you correctly?
That's right, yeah.
For the year as a whole. Let's also talk about margins, because if we look at margins across the various verticals, there is a bit of a dip on the freight side. Margins, Mangalam tells us that they've come down from about 4.2 to 3.2%. Supply chain is more or less steady. So just tell us about blended margins. What can one expect this year and how the individual segments are performing?
Certainly, the blended margins should also start improving. With the freight business saw a bit of weakening this year as a whole because there was a bit of competitive pressure, as well as the freight rates did move around a little bit here and there throughout the year. But going forward, I think the margin expansion continues to happen because we are adding more value-added segments. Our supply chain business, which is amongst the higher margin businesses, will grow more aggressively than the freight business. Our seaways business also, which has a higher EBITDA margin, will also grow in this year. And even in the freight business, the mix change is starting to happen, where we are moving more from the FTL to the LTL segment, which means that the margin should expand there as well. So going forward, all of these means that across all the segments with margin expansion, we should see an overall margin expansion. The companies also...
Can you quantify that? Vineet, sorry to come in over there, but can you give a rough range? Can you roughly quantify what is the kind of margin expansion at the blended level that you would hope to achieve in FY25?
I would think about a 75 to 100 basis point improvement on the numbers should be there.
Okay, so I believe earlier you said 10 to 11% is a range. Now, are you saying it could be 75 basis points above 11%?
It could be around the same 11-ish, 11.5% range.
Okay. And you've said for seaways, for instance, the margins are higher. Is it possible for you to break up the margins across the various categories for freight, seaways, supply chain, etc.?
Yes. The freight business typically operates at about 4.5% EBITDA. The supply chain business about 10, 11% EBITDA, and the seaways business at about 40% EBITDA. So there we will see some amount of movement in every single area. In net, as I said, about between 11.5% is what we're looking at overall EBITDA margins for the year. We also have no debt on our books. We have surplus cash. We're sitting around 400 crores of cash. So that also means that there's no interest cost. It's mostly a lot of depreciation because we have ships and trucks, which are high depreciable assets. So that continues to increase the EBITDA margin as well.
Vineet, just another question on seaways, since that is the higher margin business. To what extent do you think you can grow it as a percentage of the total revenue pie? Where did you end FY24 at, the contribution from seaways? And How much higher will it be at the end of the current year, FY25? And if you could just tell us, I mean, what are the routes on which you're operating, how are freight rates looking, and what's really happening there?
So it's a very interesting business. We operate only on the coastal waters of India. We operate on the west coast as well as on the east coast. We have 2 ships on the west operating from Kandla to Cochin. And of course, we stop en route at different ports. And on the east coast, we operate from Chennai and Vizag to Port Blair. And these are 6 ships. We own these ships. They're about 80,000 deadweight tons in total, and we have about 8,500 containers. We move everything in that. From ceramic tiles to cotton to even general food items. Now, the business has a potential to grow rapidly, but the capacity is a problem for us. We typically buy ships from the second-hand market, and with the Red Sea crisis that's going on, availability of ships is just very, very little. And we've been trying for the last year and a half to really look at an acquisition of ship, but we've not been able to find something. We, in fact, went ahead and ordered brand new ships also to a Japanese shipyard, which had to be cancelled because they were not able to fulfill the obligations. And we are now looking for buying 2 more new ships as well. So this is still work in progress, but coastal shipping is only 6% of the movement that happens in the country, of the freight movement. In China, it is close to 20-25%. And as a country, if we have to really bring down logistics costs, we need to move towards the coast. Of course, move towards rail and the coast as well. So it is an imperative part of the business.
You said you're planning to buy 2 more ships now. You've been struggling to add capacity, in seaways, but now again you're in talks to add 2 more. Do you think it can happen in FY25? And will FY25 growth be similar to FY24 in the absence of any increase in capacity?
I'm a little less hopeful of adding capacity in this financial year because the crisis doesn't seem to be getting resolved anytime soon, and pricing is not coming down for second-hand ships. We might place the order for the new ships, but that will anyways get delivered more than 2.5 years later. So, so yes, I don't think any capacity addition will happen per se this year. We are hopeful for something. And that will not impact the business revenues or profitability.
Since you did mention that, I mean, intrinsically you want to add more ships, let me just talk about the overall capex plan as well. How much are you looking to deploy this year, and what are the cash levels like?
So we are looking to spend about 375 crores, which means that about 125 crores will go into new facilities, warehouses, the like across the country. About 100 odd crores, 125 crores into new trucks and rakes. We own some automotive rakes, railway rakes, which we plan to add more. And then, of course, the ship, if there is a potential to add something, then another maybe 75-100 crores there as well. We are, as I said, 0 debt, so we have 400 crores cash on our books, and we can, but we will borrow if need be, and we have the capacity to do that.
Okay, we leave the conversation here. Thank you very much for joining in. Transport Corporation of India more bullish about FY25 than they were at the start of FY24 when they thought things are slowing down. They ended FY24 with a 6.5% top line growth, but for this year, they're looking at a 10 to 15% top line and bottom line growth. Get into a break. We'll discuss market technicals. Vishal Malkan joins in on the other side.